Hello guys, welcome to the Monday forecast. So let's get started with the euro and the US dollar. We have just opened a couple of hours ago and there was a huge gap right about somewhere around here, which was now corrected, so the price data has changed. With the current price data we are still stuck between the low and the high, and with the prior price data we were broken out of the low. I think the candle looked something like this. So it was a big candle, a huge gap. But now the data has been corrected, so we are still stuck between the low and the high. In the prior price action, the candle signaled to me a range because we broke the high, retraced, broke the low, retraced, left a large wick here, left a large wick here, broke the high, retraced, left a huge wick, and are now stuck between the low and the high. So currently, the most probable way that what will happen is that we will get more of this ranging price action. That's what I am expecting. Looking at this just, it doesn't look good. It looks like a very bad price action and very range bound. I know that we have the liquidity areas below and above the range, because the range has now been clearly defined. And so people that are going long keep their stops in this box, those going short keep their stops in this box. Those are all of the traders trading the lower time frames. Why is that important for us? On the 1 hour chart, well, it's important because the price can just break into the liquidity area and retrace. So what I need to see a large push up and then maybe a flag, or a large push down and maybe also a flag, but I need to see that conviction. Also, what I will be looking for is an ascending into the upper liquidity area. This is also a high probability pattern to reverse. And the logic behind this pattern is that the stops are being taken out, and then the market makers are ready to reverse the price to the downside. And same thing in the opposite direction, so maybe a descending structure, reversal to the upside, and then look for that nice flag. So definitely something to consider, but as I said, this price action is not looking conducive, it's not looking good, especially for us trend traders. Maybe if we were trading the range, this would have been perfect. But as a trend trader, I'm looking for a trend and I'm looking for the price to break out of this structure. Okay, let's move on. So the euro and the Japanese yen has not done anything. We are still stuck between the low and the high. We had this we did have this nice push to the upside. This was a nice impulse, but then we got this aggressive retrace, and an aggressive retrace usually signals to us a range, which we are now getting, or it signals to us that we will get a reversal. In this case, we got the range, so it's a good thing I was not looking for any trades when I saw that aggressive retrace. And now what I can see that there are clear liquidity areas above and below, and we need to see how the price reacts in those areas. So does it just break and retrace, or does it actually ascend and then give us a nice reversal to the downside, something like this? Or does it maybe descend, reverse from the lower liquidity area, and give us a nice trade to go long? We need to see if we get a nice large push up, then I'm looking for a flag, or a large push down, also looking for that clean flag. I would like to see it actually to push up. Why? Well, because we are kind of trending to the upside. We had this nice impulse, then this large pullback. But if we continue up, then that would be a well-established trend, since we have the first impulse and then we have the second impulse. For me, a well-established trend is a trend where we have two impulses going in one direction. That's about it for the euro and the Japanese yen. Seeing nothing, want to see the break of the high or the low, and want to see a nice large break. So for the Aussie and the US dollar, I was in a trade. So let me take this whole price action back. Right here I was seeing a really nice push down, then a small pullback, and then a continuation. Then the market opened with this candle. So this was the opening candle a couple of hours ago. I think 12 or 13 hours ago. And at this point I was looking for a trade to go short, but I wanted to see more of a range. I wanted to see something like this and then for it to tap my area of interest. Of course, my area of interest is the most recent low as always. So this would be a break and retest trade. But what we actually got, we got second candle, then a small pause, and then this candle would tag me in. This was not enough of a range for me personally. Why? Well, because usually on Sunday and the market open, I want to see a larger range and then a potential trade. And I tend to avoid trades that happen before the London Open. The London Open is at 8 o'clock, so about for, I think it's 9 hours, I tend to be a bit more selective and pause with the trades, and I want to see a nice large range at this point and then maybe for it to tap me in. This was not enough, but then this one did work out good, so the price did continue down. And at this point I was seeing this nice established trend. I was seeing small pullbacks, no momentum shift in the pullbacks, which is always a very, very good sign, especially on the Aussie and US dollar. When we see these small pullbacks that have no momentum shift to the upside, it usually signals to us that we will continue trending down. At this point I did like this very, very much, but because of this wick it was a concern. So I wanted to see maybe a combo to the entry point, or even some sort of an indication that there is weakness to the upside, something like this. And what actually happened? Well, we got a combo trade. And at this point, I did not really like this momentum shift. But then what I did really like is that we rejected from the area of interest. And I did place a pending short order at this inside bar, which would be my entry point. So usually I take an entry from the most recent low, which would be here. But if I see an inside bar, so a bar that doesn't break the prior high or the prior low, then I place a pending order at the inside bar. I really like that we rejected like this, because it signals to me that the price cannot be sustained to the upside. So we broke the high, rejected, broke this first high, and then as you can see rejected. And then I got tagged in with this candle and tagged out. So with this one candle I got tagged in and tagged out for a 1% loss. It was a good trade. I really liked it. The best thing about it was that what was this rejection right here. So I would take this one again. Unfortunately this time it did not work out. It was a 1% loss, but it happens. What I can forecast now is that we will probably get more of a range at this point. So we will probably get more of a range at this point because, well, it's Monday and Tuesday. The markets are predominantly range bound, and we have this wick. We have this sort of, let's say, start of a range. So I am expecting more of that sort of price action. Or we can continue up. If we get a large push, I'm looking for a flag. If we start to ascend, I'm maybe looking for a reversal. But the thing that concerns me is that then we would have this descending into an ascending structure, which usually signals to us a larger range. So I need to be careful with that sort of a setup. What I would like to see is a nice clean descending down and then a reversal to the upside. And the best scenario at this point would be a large push down and then a nice trade. Why? Because we are still trending to the downside. We have not broken any of the prior highs, so we are still trending down, and I'm still looking for short trades. If we get a large push down, I'm looking for a nice flag or even a potential break and retest. It all depends on how the price action looks. So let's see what will happen. One thing also I can note is we have a huge wick here, we have a large wick here. When we see that sort of a setup where there is a huge wick on top and a huge wick on the bottom, it also usually signals to us a range, and the price action usually does something like this. Okay, so that's it for the Aussie and US dollar. For the final pair, so the Aussie and the Japanese yen, this one is doing nothing. So we got this nice impulse up. We got this range, broke the low, retraced, and then we broke the low again, retraced. So we are, and then we broke the high, retraced actually. So we are kind of descending but also ranging, as you can see here. For me personally, this one is not showing me anything. This is not good price action. I'm not looking for any trades. I want to see some cleaner setups, and this one is just looking like it's going to be range bound. So I am expecting something like this. What I would like to see for a trade is a descending and then a reversal to the upside, like this, or an ascending and then a nice reversal to the downside. So an ascending, reversal down, or a large push up. Just a second. So a large push up, look for a flag, or a large push down and also look for a flag. So I want to see more price action and for it to form a high probability setup, because this is just not looking good. This is looking like crap. Okay, that's it for the forecast. Those are all the 4 pairs. Currently not showing me that good price action. We may continue with the sort of bad price action we had the last week, but if we start trending, I'm prepared. I'm looking for setups. So let's see if we will continue trending or if we will continue with this sort of going nowhere price action. That's it, and I will see you guys tomorrow.